Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, it's my pleasure to bring Nick Santiago, President and CEO of In the Money Stocks, back on the show. Nick, thanks for showing up.
Great to be back, Michael. Thank you for having me.
All right, my pleasure. All right, we're going to start off talking about Apple today, right?
Yeah, we're going to talk about Apple today. A couple of weeks ago, I had been waving the red flag to your listeners, also to my subscribers, about that getting up to the 700, maybe a little pierce to the 700 level, and I said the stock would probably decline down to the 636 level, and here we are today around 632. Traders now should look for a little bit of support down here, even though the stock is selling off today, and it doesn't look so pretty on the charts now that it's significantly below the 50-day moving average. But nonetheless, there's still a fair amount of support here around the 620 level, even if it does get down there. Even at where it is now around the 630 level, there's support. But if this thing makes a bearish pattern, this chart makes a bearish pattern over the next week or so, Apple could legitimately break down and go test the 550 level, the 600 first, obviously, then the 570, and then ultimately as low as 500. So I think traders need to still be on guard that this thing can go down a lot lower. And that's where we stand with Apple at the moment.
Okay, but the first threshold that you're looking for support, did I hear that right, about 620-ish?
Well, I think we're even at it now, believe it or not. Okay. I think we're even around the 630 level. I think we're at a support area for Apple, at least in the short term. Whether it lasts a few days or a week, I'm really not sure. What I'm doing with Apple here is I'm just watching the pattern. If I get a bearish setup, then I do think over the next week or so, I do think that the stock can break down lower. But in this area, give or take, $10, because it's such a big high-priced stock, and the swings on this are $10 can happen in a flash. I think the stock has a little short-term support here.
Got it. All right. Now let's go into the NASDAQ, the QQQ.
Well, as you know, Apple is a big part of the NASDAQ 100, and then you look at the QQQ. One of the ways I told your subscribers that they could play this short trade was to buy the QID, which is an inverse to the triple Q. But the triple Q is also down into a support level here around the 66.85 level. Now, one of my members of In the Money Stocks told me, they said, Nick, do you think there's a little head and shoulder top on the QQQ? And when I actually looked at it, I said, wow, there is a head and shoulder top, and that gives us a projection of around $65.50. So any bearish pattern here on the Qs, you could probably look for a move. I'm going to think down into that $65.50, possibly $65 level.
I see that. Yeah, I see the previous tops that we had back there in the July area. Yeah, I get that real well. But my numbers were telling me that today should be some kind of a possible support, and I was really surprised to hear you say that's about what you're looking at right now with Apple and the NASDAQ. But let me throw another question at you. This one, we've got a little dichotomy here, if you will.
Sure.
Lower on the NASDAQ, but higher on the S&Ps. Do you see a leader-lagger situation there, or is it just...
Well, the NASDAQ and the Russell are both lagging the S&P and the Dow. Anytime that has happened in the past, that's a real negative for the markets. You never want to see the NASDAQ leading the markets lower. The NASDAQ should always be ahead of the markets, because that means money's going into risky assets. When money's going into, say, the Dow 30, which are blue-chip companies, multinationals that do well off a weak U.S. dollar, that's really safety. People are just playing those stocks to park money, also to collect a dividend in really high-profile multinational companies. So when I see the NASDAQ lagging, that's always a red flag for me and a warning sign.
Okay, thanks for bringing that up. All right, that leads us into the banking industry and your favorite, J.P. Morgan.
Yeah, J.P. Morgan, still the stock to follow as far as I'm concerned. Right now, the stock's up 14 cents today, but it's had this long consolidation base really since QE3 was announced on the 13th of September. If this pattern fails, then we're in for a steeper correction. As you know, I'm already looking for just a little bit more of a pullback on the S&P 500. But overall, I think everybody should keep a close eye on JPM and see how this thing reacts. Right now, the stock is in very good shape. It's healthy looking on the daily chart, and that signals a move possibly higher. But any close below the daily chart 20 moving average would signal a potential move to $38 and then as low as possibly $36. So I think that traders should watch this one closely because this will tell you really the health of the U.S. market.
Well, for the people that are driving down the road in their cars, give them an idea what the number is on that 20-period moving average.
Right now, the 20 moving average is around $41.
Okay, so anything lower than 41, start to look out, right?
Start to be in caution mode, yeah, because that's telling you right away. JPM basically is the U.S. market, and if JPM starts to falter here, especially from a bullish consolidation pattern, the best moves come from failed moves, and that would not be a pretty picture on that stock or on the financials.
Okay, what is going on with FedEx?
Well, as you know, FedEx had a huge move yesterday after they, basically did a lot of cost cutting, and then today you got a big reversal day. Ultimately, with today's action, I think it pretty much tells us this thing's going to come right back into the range around $86. It really is the leading transport stock out there. But if you look at the transport index, you're going to see that this stock, the transports have been like an EKG, a cardiogram, so to speak, since June. Maybe you could even make a case for most of 2012. So, again, I don't think people should make too much out of that FedEx move yesterday, especially with that big reversal that you're getting today. And it's on a decent spike in volume, 3.7 million already with still 20 minutes to go into the closing bell. So I do think that FedEx is going to come back to earth, and this is the only real stock that you need to follow when it comes to the transports as far as I'm concerned. Okay,
and do you see the transports getting back down into that 49 area?
Well, I think right now the transports can get back down there. They're holding steady. Weren't able to get above the daily chart 50 MA. Even if they do, I don't see them getting significantly above the 200-day moving average, which is around 51.38. But so we'll have to watch that closely. But yesterday, I should say, the transports put in a nice about 2 days ago, and that is telling me they're probably going to dip before they go higher.
Okay. All right. Now, you wanted to cover the gold market, GLD, on the ETFs. Let's talk about it.
Yeah, I wanted to cover the gold market simply because gold is holding up like a rock. I have not been buying more gold up here at all. I've really just held tight. I've had my members hold tight as well, saying this thing needs to base a little bit longer. But the more I see gold just continuing to consolidate inside or slightly above that bar from September 13th, it's telling me that the central bankers have the pedal to the metal here when it comes to creating inflation, and that's something we have to watch out for. But if this thing can base for another month, this is going to have one heck of a breakout to the upside.
Okay. All right. Well, when you bring up the Fed, we talk about inflation. We can't leave out interest rates. What about the interest rate markets?
Well, the interest rates market, what can you say? I mean, everybody needs to follow the 10-year because that's what mortgage rates are based off of. But right now, I wouldn't be shocked to see the mortgage or the 10-year yield move back down to around the 1.57, 1.58 level. But I think it's going to have a ton of support around that area.
Well, I'm looking at the TLT market right now, and it's right up against the 50-period moving average at 123.
I'm going to give the TLT an upside bias to around 126.50 to 127 ultimately, and then it's going to stall out, in my opinion, if my calculations are correct. If you notice what the TLT did was it traded as low as 118.05 on the 14th. That was the day after the QE3 was announced. It rallied up to the 50-day moving average on the 28th, and then it actually pulled back to a 0.618 retrace, and now it's starting to move higher again. So I'm going to give the TLT the benefit of the doubt that it could get through that 50 MA into the 126.25 to 127 level.
Do you see that kind of fueling any move up in the stock market?
I think it's going to move. The TLT moving up will move the stock market down.
You do?
Yes.
Okay, so they're going to be moving the money out of the risk on. Actually, I got that reversed. It's going to be risk off, money coming out of the stock market.
Risk off, exactly.
Okay, all right. And do you see that lasting for any length of time, or just?
No. I think it'll probably last till the elections.
That's what I was just going to go. So, in essence, from here to elections, probably range bound in a lot of things.
Yeah, range bound to slightly lower.
Got it. All right. Do you have any events coming up?
We do. Not this Saturday, but next Saturday on the 20th of October, we are holding an In the Money Stocks Methodology webinar. It's about 6.5 hours long. It's a boot camp. That starts at 1 o'clock on Saturday, October 20th.
Okay. Give everybody a way to get in contact with you, and we're going to have to say goodbye.
All right, come on over to InTheMoneyStocks.com. Check us out. Take a 7-day free trial to our intraday stock chat. You'll get to see our screens as well as our research center where you get all of our nightly setups and our cycle work.
Great. Nick, thanks for coming on the show. We'll talk to you next week.
Have a great one, Michael. Thank you.
You too. Everybody, Nick Santiago, President and CEO, InTheMoneyStocks.com. Coming up next, Christopher Vecchio, current